today's part with the following interruption for a public service announcement.
Welcome to Investing in Intelligence, where we talk about artificial intelligence companies, stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about Google. I want to remind you that the opinions expressed on this show are just that, opinions. They should not be taken as specific advice to invest in a particular way. So, Kai, thanks for showing up despite your back strain, if I'm allowed to violate your HIPAA rights and mention medical issues. But thank you for showing up despite not feeling 100% this week.
It's been the last 3 weeks where I don't feel 100%. James, I never feel 100%, but life continues to go on. You got to get up and make moves, man.
Awesome. Great. Well, yeah, I wanted to jump into Google today. To be honest, backdrop, I don't feel like there's a whole lot going on since this little recovery from Black Monday, Monday, August 5th, the big scary Monday. I feel like there hasn't been as much focus on things, but yeah, interested to talk about Google.
Is that the actual true nickname? Is Black Monday? Is that like the U2 song,
It's something I adopted from historical precedent. There was some kind of Black Friday or Black Monday way back in history, and I decided to reuse it for this August 5th that we had.
August 5th, yeah. A date that will live in stock market infamy. Black Monday, apparently, when the yen tries to sink us all in regards to leverage gone bad. James trades a lot with leverage. I still do. I'm starting to do a little bit more with that, but we should do a podcast on AI and leverage, and maybe go over a few in the future. We'll talk about that. Maybe some AI plays you can utilize in leverage trades. But Google was also in the news, and we thought we should address that. I know have we done an episode on Google? I don't think we have.
No.
Yeah, I mean, neither you or I was so excited about Google. We were talking on the phone, and I was going to check on one of my properties, and we were talking on the phone about Gemini and Google and the state of Google. And then Gemini it was like, let the air out of my tires, James. It burst my bubble. And I have not been a fan of Google since then. I currently do not own a position in Google. Full disclosure, James, do you do? Right or no?
No, last time I owned it, I had a leveraged position. So I had a 2x bullish ETF, and I bought that on that Monday. So Monday, August 5th, when we hit the bottom, on that day, I bought a bunch of leverage ETFs, but I sold out of that. I took pretty early profits after we started to bounce back. So no, I haven't had a position.
Once you start doing this for a while, you start to realize a little bit what your style is, your flavor. And definitely my flavor is buying things, it seems to be, and it is also a curse in my trading game, I would say. Sometimes jumping on a drop is what I'll do. It's sort of a win the fear. And at the same time, both Google and Apple had dropped. Do you remember that? The news on Apple was really bad, and Google also dropped. Google went down to the 130s, and Apple was down in the 160s, maybe high 150s for a period of time. And you and I had both talked about maybe which position to take. I took a large position in Apple, and I passed on Google. Missed out on both, or one of those opportunities, because Google, both with a rebound. But yeah, in the news. So my understanding is that Google, is it going to be broken up? Not broken up? What's going to happen there, James? Explain to our listener.
Yeah, I think that's really the first topic to discuss with Google. So many issues, so many topics that we could talk about with Google. I mean, we could literally go on for 2 hours just on Google. But I think the most important thing is just the bear that's staring us in the face here, which is the potential U.S. government breakup. So where that stands, I think the All In episode from last Friday was probably the best resource if someone wants to rather hear a discussion on whether or not that's a reality. I think they went into it and they seem to think it's a reality. And, those guys have worked for Google. They're the best tech entrepreneurs and tech venture capitalists in America. So they know, and they seem to think that there's a very real possibility of Google being broken up. Now, the thing that's weird about it is that the U.S. government seems interested in breaking off some segments of Google that wouldn't really seem to be logical to break off. So if you look at Google from a perspective of what makes money and what loses money, well, they make money from search, and that's really ads, and they also make money from ads on YouTube. And then other than that, there's not a whole lot. Google Workspace, they make money, which is like companies like I have a small business, so small businesses have to pay for their version of Gmail. And then like the App Store, their Google Play Store, they make money from that stuff, but a lot of their stuff is losing money, like their hardware, like the Pixel phone, Google Cloud. They have a whole segment called Other Bets, which is like Waymo, the self-driving cars, and Other Bets lost $6.1 billion in 2022. So a lot of their stuff is losing money. I mean, what are you going to break off? Are you going to break off like Waymo? Are you going to break off Google? Google Cloud is still losing money, even though it's growing quickly. It's still losing money. Like as an investor, do I want to buy into? I mean, obviously we buy stocks that are losing money all the time, but it'd be a tricky thing to break up, in my opinion.
You buy stocks, James, that are losing money all the time. Not me. I'm joking. I've been there. I mean, so what I would like to have your take on, and we can talk a little bit about a few of the topics, but essentially what I want to break this in is to two things. Google is in regards to a long-term AI investment and where the company is set up for that. And then Google in regards to its investment in that it's going to be or likely broken up as a company, whether it self chooses to do that and split or the government forces Google to do that. So let's start with the AI play that is Google and give me your big positive is in regards to I'm thinking about investing in Google. Should I or should I not in regards to AI? And one of the things I would like to focus on is the language model in that. So what are your thoughts on that?
Yeah, that itself is a tricky answer just because of the potential of a breakup. But I guess what I would say is,
Excluding the breakup, just I mean, you and I had a long discussion about this previously.
yeah, a few things that I'll throw out for their AI issues. So Gemini, TPUs, and AI search. So Gemini is just their AI everything. Gemini is their term for the large language model that you can talk to, write to, and get help with in different Google applications. So Gemini is their AI. TPUs are their custom AI chips. And by the way, even in their Pixel phone, they're calling it a TPU. So when you hear TPU, you think, okay, well, that's going to rival NVIDIA's GPUs in Google data centers. But also, they're using the term TPU to describe the little chips that they put into their devices, like their Pixel phone. So AI overviews is something that's going into search. So when you search um, who won World War One, then you're going to see an AI overview because that's a general question. It doesn't link to a specific business, so they're going to give you an AI overview. Ideally, AI overview shouldn't be something like, "Hey, I need a CPR class in Chicago." Ideally, the AI overview shouldn't take the place because there's a company that's paying for ads that needs that traffic to their site. So ideally, AI overview shouldn't push out company search results. But yeah, so I guess that actually transitions me into my definitive answer on that question. There are some threats to Google's underlying business due to AI. So if, for example, the AI overviews are too good, as I mentioned, it could affect ad revenue, but also ChatGPT, rather their parent company OpenAI, just decided to launch a pilot of something called Search GPT, which is a rival search engine. There's something called Perplexity that I've never used. I've never used Perplexity, but apparently it's a pretty good search engine. And Apple itself, due to one of the lawsuits that we just had, Apple is potentially not going to get revenue from Google anymore for having Google be the default search engine. So that hasn't finalized yet, but that's looking like what it's going to be. So at that point, Apple might decide to make their own search engine. By the way, Bing, Microsoft's search engine, is the search engine that's integrated into ChatGPT. So I use Bing almost as much, if not more, than I use Google now, just because I use ChatGPT so much. So I would say there are huge threats due to AI. There are huge threats to Google's underlying business. We're not seeing a lot of that play out in their bottom line yet, and in their top line, we're not seeing them lose revenue yet due to that stuff.
Right. Well, two thoughts on the matter. I mean, I'm not a I don't want to bet on Google, but we do is make basically adequate decisions in regards to our investments. And so it's not betting against Google, but I have two very big concerns. Let me give you my two biggest concerns. One is I don't see Google being the leader in search in 5 years. Okay. I don't see that. I'm really concerned that is not, they're not going to be the lead in search any longer. I think the world will evolve away from just getting in to a search engine and that being Google, number one. And number two, their language model is just in general, their AI is not as good. And so, and when I'm using AI on a daily basis, one of the largest things that's most important to me is accuracy. And I think the press behind Gemini's release, if I'm not basically using an AI that's giving me accurate information, then what am I using AI for, James? I mean, so I have been blown away in regards to very fine, very important details in use of OpenAI and ChatGPT and what it can provide. And I've used Gemini some, and I'm just not there. So they're losing the as far as the language model and their search. I have big concerns there. So I am not an investor in Google. Here's your soundbite. Essentially, because they're losing the war in regards to the search. I do not envision Google being the leader in search, number one. And number two, their language model is not as good. And I don't see, unless Google starts getting out of their own way, that changing. Now, here's the positive that I see. And I haven't sifted through the financials of Google. Usually, I have. James may have, but they do YouTube. I am very bullish on. So they have a huge video registry that is YouTube, and I learn a lot from YouTube on a daily basis. And so if they were to harness the power that is YouTube, well, that's a little different story for me. I mean, be able to use Chat GPT, ask it questions with video feedback. I mean, whew. I mean, you're talking, that's what I'd be using most exclusively, just all the time. So what are your thoughts on what I just said in that regard? Do you think that's accurate? Do you?
Here's the problem with the YouTube thing and harnessing the power of YouTube for AI. Here's the problem with that. When you go to YouTube to watch a video, when anyone in the world goes to YouTube to watch a video, do they have to pay? No. And that's actually a problem. In other words, YouTube content is publicly available. And all the big AI model makers are using publicly available content to train their models at will. They are taking the liberty of scraping any publicly available data on the internet and using it to train their models. Now, what that means is companies like OpenAI, we know as a fact, OpenAI has scraped all the YouTube videos to train a number of their models. So they've trained a voice model on it. They trained their video model on it. We know that Runway now has trained on YouTube content, and we just found out recently. This was just, I believe, last week. The story broke. Nvidia is training models too, and they trained a model on YouTube videos. There was a leak from an insider in Nvidia that they have a list of, like, a spreadsheet of the top creators they scraped YouTube videos from. So in other words, everyone's using Google's content, and even we believe that even Google has used YouTube videos without getting permission from creators. So violated potentially the copyright of creators to train on YouTube videos. In my opinion, it's not a violation of copyright because AI models learn like a human and they don't reproduce content word for word. So in my opinion, it's transformative use, which falls under fair use under US copyright law. So that being said, I guess what I would say is don't think that YouTube is that much of an asset for Google, at least how it stands right now, because everyone is using YouTube to train their AI models. So another thing you said, and I just wanted to highlight this, you mentioned that they don't have the best, that Google doesn't have the best AI model. So to re-emphasize that, keep in mind that Apple talks to a number of different frontier AI model makers, including Google. And when Apple decided upon a model for their new Siri AI, for what we call Apple AI or Apple Intelligence, they chose OpenAI. They chose ChatGPT. So I just watched the entire hour and a half or whatever it was Google AI announcement that happened 6 days ago. And it's okay. I mean, their voice model, their new multimodal voice model is pretty good, but I think OpenAI is ahead of them. So I guess what I would say is it's cool that they've gone ahead and released some AI stuff. It was available 6 days ago when they did the keynote. their new AI for phone stuff, which is pretty much a copy of Siri AI. It's a copy of Apple Intelligence. I'm glad they're getting that out earlier than Apple. Apple usually takes more time to work out kinks, but it's cool that they're doing it. It's cool that they're putting the AI assistant into their phones. But I think that Apple will matter more because, as you know, Kai, as we discussed very recently, Apple has like 80% of the North American smartphone market. So it's great. It's great, Google. It's nice that you're putting this stuff out on your phones, but only 20% of Americans are going to actually use it.
And a lot of content creation as well is done on Mac products and iPhones. So yeah, interesting discussion there. So let's shift gears. Again, I am not a buyer of Google. I had owned a position in Google, but I'm not. I'm a seller of Google simply because I think they're losing the language model race, and I do not see them the leader in search in the future. Um, but let's shift gears. Let's go towards just in general the risks that are the breaking up of Google, either from the government or Google itself, saying, "Hey, we're going to go ahead and take matters into our own hands here." Is that a good thing or a bad thing?
Yeah, I would say that's such a tough question. So, from what I understand, and I'm not an expert on spinoffs, I'm not an expert on breakups, but from what I understand, typically when something like that happens, a shareholder gets shares of the constituent parts. Now, it depends on how the breakup or spinoff happens, but in general, I understand that shareholders would get shares of the constituent parts. Now, let's look historically and have a little more insight into this, but let's look historically at things like GE Vernova, GE Healthcare, some of these spinoffs, some of these breakups and spinoffs that have happened in recent history. It looks like the parts spun off, like GE Vernova or GE Healthcare, have actually performed better than the what remains. So GE stock supposedly hasn't performed as well as some of the constituents that spun off from it, and there are other examples of that. Like Kellanova, I believe, is an example. So there are other examples of that, and like the spinoffs have performed pretty well as individual stocks, but the parent company shares that remained maybe haven't performed as well. Um, I don't know. So I guess, but that being said, if they need more money for Waymo, like they just announced on their earnings call 3 weeks ago that they're putting another $5 billion into their other investment category, which is pretty much Waymo and a few other little things. So if they need more money for Waymo, maybe Waymo as an individual stock would have a higher market cap than 5 billion. So through an offering of Waymo, maybe they could raise more and have more money for that.
So, one of the benefits of a company becoming IPOing or becoming a public traded company is it's a way to raise money as an investment. So you can raise money, and that you can utilize that money to expand your company, buy more things to make product, and then you'd be able to sell more product. You'd be able to make more money. When you're just coming up with your own business, essentially you have only a few limited ways to raise cash, right? You can find the cash yourself, you can invest your own cash, you can take out a loan, or you can get private investors. The other way to raise cash is basically make your company public. And so when you make a company public, you sell shares, and those shares increase your market cap, which then increases the amount of cash that you have to grow your company. So just some basics there for our listeners. But yeah, so here's one of the things. I think this is a story that's being told, and I'm following this along. I'm not an investor in Google. I think there's too much risk right now. I mean, I think Google's at a very good price, especially with the drop back on the Black Monday James is describing. I like the price point Google was at. I'm not investing because of basically future risk right now. I don't think it's a absurd idea to invest in Google. I'm not comfortable with some of the risk there that James and I are mentioning. I could see this working in Google's direction. I mean, me personally, I think the bureaucracy or some of the other issues at Google are a problem for me. But if you take matters into your own hands in this scenario, you can make this work out well for yourself, like you're saying in regards to Waymo. I wouldn't allow, I think it's a huge risk when the government steps in and decides how it's played out for you as a company. I think it's much better if you think this is coming, the storm is coming, for you to go ahead and take matters into your own hands and prepare and do this as beneficial for yourself as possible. And if Google does that, well, maybe I'll be a buyer then. But currently, not. What do you think?
Well, one token I would add to that, I personally would not buy Google Cloud as an individual stock, as an individual company. And the reason is that AWS is extremely profitable. AWS, Amazon Web Services, has margins of 30% or higher. And pretty much Amazon Web Services drives the profit for all of Amazon. And Google Cloud isn't even profitable yet. Now, keep in mind, Amazon Web Services came 2 years before Google Cloud. So Google Cloud was playing catch up when they started their cloud segment to try and take market share from Amazon, but they've never managed to become a leading player. Well, I guess you could say they're a leading player. They just can't. They just can't take away Amazon's monopoly on cloud services. So what I would say that despite being in it for 16 years, they're still not making money. I mean, Google Cloud, I believe 16 years for Google Cloud and 18 years for Amazon Web Services, but Google Cloud still can't make money after 16 years. So people are excited that Google Cloud revenue is up 29%. That's great. I know they're approaching profitability, but it's been 16 years. And Amazon Web Services has been profitable, massively profitable for a very long time. So I don't think, I'm not that excited about Google Cloud, I guess what I would say. Now, yeah. So I guess that's what I would say on that. I mean, YouTube would be a heck of a stock. I would own YouTube. I would buy YouTube as a stock.
You buy two. Yeah, I think it's an excellent point. And we did our acronyms on a previous episode. Mine was just word vomit. But right off the bat, I'm thinking of like Sam. I just need two more letters for our listeners out there. Give me another acronym that I can use so I can beat James at this. But basically, Stryker would be in there. Amazon. I have a very large position on Amazon. A large part of that was because of even the last earnings, AWS revenue was great. So, and Microsoft. So, two of the companies we're both mentioning in regards to Google, in my opinion, are great alternatives, which are Microsoft and Amazon. So,
Yeah, absolutely. Now, when I look at their PE, their forward PE for next year's earnings is 19 with today's stock price. So technically, Google has a forward PE that's a little bit lower than some of these other companies, but that's for a reason. That's because we keep getting negative news reports related to Google. So there is a reason why it's at 19 instead of 21, 24 for a forward PE for next year's earnings. There's a reason.
I like the evaluation. I'm just saying it's the risk there that may be scaring a few people off. And it's scaring you and I off. And right now, that risk is not worth the reward. I think there's other companies with the pullback or drop that I went ahead and took large positions in. And we've covered some of them, and we'll continue to cover some of them. So, yeah, give me your last 30-second sound bite. Also, what you expect for the rest of the week. I think Jerome Powell is speaking this week, or even tomorrow, or I think it's maybe tomorrow. So, yeah, give me your 30 seconds on Google and the sound bite for the week.
Yeah, so I am not buying Google due to, I guess should I say this way? Okay, I am not buying Google due to their inability to monetize key segments like Google Cloud and hardware, and the fact that their underlying business could be disrupted by AI rather than become more profitable.
Yeah, saying some of the same thing, but it sounds like kind of what you're saying is that even if you were to break off and monetize certain segments, it actually you could be an investor then in those particular segments.
I'm investing in YouTube and search, but I don't know if they're going to break it up like that. I mean, I'm talking about breaking off Google Chrome. I mean, that's ridiculous. So I don't know.
In my other, my profession, I use YouTube or used YouTube previously quite regularly. I mean, I use YouTube. I mean, for cooking, for example, I have enjoyed learning different recipes and cooking. I use YouTube on the regular. So, what do you expect to happen for the rest of the week?
For the rest of the week, nothing. I expect pretty much nothing to happen. Jerome Powell is going to talk on Friday, from what I understand. So he'll probably hint at a 20. Well, he's not going to say like 25 basis points, but he'll hint at a cut, and then we expect they'll probably cut 25 basis points. With the data that we currently have, we expect that they'll cut 25 basis points. But do not forget, remember, before the next Fed meeting, we have the first Friday of September, and the first Friday of September will be the next labor report. So I will harp on this endlessly until we actually get there. That's the 6th. Friday, September 6th will be the next labor report. And I am predicting a pretty bad labor report. But I do think the reaction to the bad labor report, let's say not great. I'm predicting a not great labor report. I think the reaction to it might not be as bad as this Monday the 5th reaction. The reason for that being, since Monday the 5th, we have educated ourselves continually. I hear it every day on CNBC. Oh, the economy is still okay. GDP is still okay. Things aren't that bad. So even if we have a bad labor report, I don't think we're going to see a complete crash of the stock market like we were heading towards on that Monday the 5th, just because people seem to understand now that, hey, GDP is okay. Atlanta Fed GDP, the actual GDP, everything is looking pretty good on GDP. So we don't need to panic quite yet. But I do think we'll still have that bad report. Now, if that report is bad, we might get a 50 basis cut instead of a 25 basis cut. But yeah, we have to see. So that's the next big event. Obviously, Nvidia earnings is not this week, but next week, next Wednesday. So we have some stuff coming up next. So I would say this week don't matter that much. The next 2 weeks, next week with Nvidia earnings, and then the week after that, oh my goodness, that Friday, that's when things are going to start to roll. And personally, I'm going to de-risk a little bit. So I actually have been selling a little bit since we reached bounce back territory. I've been selling a little bit. I've been pruning a little bit over the past few days, and I may actually continue to sell a little bit from my positions as we run up into Nvidia earnings. A lot of time, Nvidia earnings is a buy the rumor, sell the news event, meaning the stock goes up before earnings, and then sometimes it does go up after earnings. But historically, if you look at the chart, Nvidia earnings is usually near the peak of local top. It's usually the local top or near the peak of local top. So I'm actually doing a bit of pruning into the next 3 weeks from now point. I'm doing a little bit of pruning leading up to that point in time because I do have some concern for that.
Yeah, we're 2% away from, I think, the S&P reaching its all-time high. Got a great bounce, but we will see if the bubble is going to be let out of that balloon, the air let out of the air let out of that balloon in September. Yeah, I'm hoping for some sideways action. I do think we're going to be kind of some. I do think we're going to be all gas ahead this week and next week, but I'm hoping for a little sideways action. I'd like a little bit of digestion before we head there. I don't have a prediction on the jobs market. I don't. And it's also difficult to predict earnings as well. I mean, a company like Starbucks can post crap for earnings and then rise 20% on the hiring of a CEO, which I would really love to do an episode with James, because James has ridiculed me for a long time over my position in Starbucks, very fairly being ridiculed there. So, yeah, thanks, James. Thanks for talking.
Real quick. I wanted to just mention one thing. I don't think it's worth an entire episode, but I did look at this. You mentioned this SERV Robotics stock.
Why? I want to go over it.
It says
I do.
I can't do a full episode on SERV. I mean, it's there's just not enough to say there. What I would say, so I guess whatever you're interested to say it in like 60 seconds. But this company it actually didn't IPO. It pretty much got moved up from the OTC market. So it was like a pink slip or pink sheet, I think they call it, stock. It was pretty much a very, very low cap stock on the OTC market. And then it moved to the actual stock market in 2024.
Does it not look like Wall-E? I mean, I love the movie Wall-E. Does it not look like a little Wall-E robot?
I mean, I've seen these things. So I guess the issue, and by the way, it's perfect to throw at the end of this episode because I can just tell you like my experience with it. I've seen them in Miami, and I might have seen one in Austin. Pretty much, you're walking down the sidewalk, and they come up to you, and like if you walk in front of it, it stops for a second, and then you walk out of its way, and it keeps going. And yeah, it takes food to people. But like, do you really think that's gonna take the? I mean, first of all, it moves a lot slower than an Uber Eats driver, and also, a lot of time when I order Uber Eats, and I am very experienced in ordering Uber Eats, it's coming from a distance. It's not coming from the. I would walk if it was 2 blocks away. I would just walk to the restaurant. So a lot of time Uber Eats is coming from a distance, and this little SERV robot cannot make a 6-mile trip to bring my food. So I don't know. I don't see it. I don't see the utility. I don't see the value. I don't know if it needs to be its own stock.
When the iPhone came out with, or phones came out with cameras, totally understood. I was like, this is going to take off. This is going to take off. I knew the selfie was coming long before people probably thought the selfie was going to be a thing. I'm like, this is going to be a thing. iPads didn't really understand. I'm like, well, why not just get a laptop? Like, I don't really understand an iPad. So, but iPads took off. So we'll see how the Wallies invade our world. I think there's going to be Wallies everywhere bringing me my daily latte, just latteing me all day long, James, my little serve robots. So,
Well, I see real quick. I just want to ask you because I saw on July 18th, this stock moved up massive and it's been moving kind of up since then. So apparently it had no publicity for for one. What did I say? What did I say? July 24th? How much? I said April
I don't know.
18th.
It's around $11.50 a
Okay.
share right now.
So April, May, June, July. So for 3 months, it was pretty much like bottomed out and then it moved up big. Can you just tell me where you heard about it? I'm wondering where you heard about it and why people all of a sudden 3 months after it moving to the stock market, why they're buying it.
I don't know. I'll have to. I'm drawing a blank on where I heard about this, but
I thought you told me Nvidia invested in it. I don't want to start a rumor that's not real. Did you hear that or not?
I think I read a finance report where Nvidia had taken a position in SERV. Don't quote James and I on that. You please keep watching our future episodes. I don't want to present fake news out there. This is just something interesting James and I thought we'd throw into the episode. Please let us know what you think.
Yeah, I'll close out the episode, but luckily for us, obviously we are Chat GPT enabled. Chat GPT just searched the web and it says, yes, NVIDIA is an investor in SERV Robotics. NVIDIA made a significant investment in the company, 1 million shares in April of 2024. So their investment amounts to $12 million, which is 10% of the company. So NVIDIA owns 10% of this company. That is proven now by Chat GPT, which is, of course, always 100% accurate. And so what I will say is that's promising, and that does make me interested in it. I like that a lot. But there's no NVIDIA GPU in each of those little robots. So I don't know exactly how that investment works out. But usually what happens when NVIDIA makes an investment, it takes a couple months for them to have to disclose that. So what happened was probably they disclosed it on July, whatever.
Stock went up.
Yeah, stock went up. All right.
Well, it's a little overvalued probably right now. It's $11.50 a share. Go ahead and put it on your watch list. Check out this company. Not saying taking a position in it. We're just enjoy talking about AI companies. So
yeah, I've been there, done that with SoundHound. I lost money in SoundHound. Well, actually, I think I made a little bit, but SoundHound went way up and then back down. So just be careful with these little stocks that NVIDIA has a stake in or whatever. Just be careful with them. Alrighty, thanks for tuning into our show. Please give us a like or comment. We'll be back in the next episode to cover more AI stocks. We will not be covering SERV in an entire episode next time because we just covered it now. You can find all our holdings and trades at investingintel.ai. Thanks so much, Kai.
SERV McDonald's. Maybe they'll give me some McDonald's. Thanks, James.
The first revolution is when you change your mind about how you look at things and see that there might be another way to look at it that you have not been shown. You will not be able to stay home. You will not be able to plug in, turn on, and pop out. The revolution will not be televised, and be no rerun, brothers and sisters. The revolution will be live.